Good morning. Right, I've done us this leverage trading calculator for our Bitcoin trading. You don't have to just use it on Bitcoin, use it on various sites, but this is kind of like designed it in a way for trading on as MEXC. Just makes it a bit easier. The only thing you don't put into account is like the trading fees, but as you know, the trading fees on MEXC are like literally pennies, if that, depending on what you're trading, how much you're trading, or should I say how much you're leveraging. It doesn't really need to be put in for this. This is just to give you a guide of where to trade and how much leverage to use, to be honest. It gives you a nice visualization, I can speak. But I'll just show you. So at the top, we've got this, so you can click to expand, and this just gives you a little breakdown of how it works, and it gives you some ideas, a little guide of what you can do. So that's all on there. It gives you all that. So that's handy, just have a read through. And then basically all we're doing is, let's say we're taking a trade. Let's say the price at the moment is, let's put in 95. So we'll just add current pricing. And let's say we're doing 50 leverage. We'll not change this. Like I say in the guide, it does tell you how to change this and add to ladder trade. Basically put different leverages in for each trade as price changes, things like that. Works really well, to be honest. But we'll just keep it at one leverage, just to give you an idea how the calculator works. So let's say we've come in at 95. And I like to do a straightforward, because it's kind of like, if you do it 95 at this, it's kind of like doing one contract, if you want to call it that, if you're doing that kind of thing. So it just makes it nice and equal. So we'll add that trade in. That's trade one. Now let's ignore this for a second. Let's say the price has dropped down to 90. Should we say just 94 or 94 500? Let's say that's what we call a psychological number. And let's say we go in with, we'll keep it around again. Let's say 94. So we do that. And let's say it drops again and it goes down to 90. Leaving it at 50, and we do $90 on that one. So what I've done with this here is I've set it as if the price has come down to 90,000, which is the last trade we had. So then what you can do is you can calculate it, click calculate, and it'll give you what your profit and losses are at the moment. So what you've got at the minute is you've got your trade one, what you're coming at 95, you're $5 down on that. This will vary slightly, like I say, but it'll near enough be that. I've checked it with the calculators on MEXC. Gives you an idea return on investment. Trade 2's down for obvious reasons, and your trade 3 isn't. Obviously it'd be moving, there's a price moving up and down, but just giving you a quick visual on this. So it gives you how much remaining balance you've got, which is what we put in at top. Yeah, so you put in how much you want to. You can either put your balance in or put how much you're wanting to risk on this, along with your leverage and everything else. And it'll give you the total margin, which is $5.59, because don't forget you're leveraging it. So even though you've been putting like $95 in and everything, what you're using of your balance is only $5.59. Total trade size, what you've got is 279.50 USDT, because it's leveraged, you're only using $5.59. Total cost per move is $2.79 for every 1,000 it moves. So like if it goes from 90,000 to 91, that'd be around about $2.79 for each move on that. That's handy to know. Your total P&L is 9 minus 9.50 USDT, and that's your remaining balance. So then you can keep an eye on it and decide what you're going to do. It gives you an idea, worst case. So you can have a look at Bitcoin, you can have a look at what the lowest price were in the day if you're doing day trading, and the highest price, and you can work out where you're going to come in. Let's say, for instance, now we sit on that a little bit and price comes up, and what we're at 90, so let's set price comes up to 92, and we decide to come in again because we see a little jump, so we'll do 92. and we have $92 leverage on that one. So add that trade, and let's say the price has come up nicely, has jumped a little bit, and it comes back up to its original price at 95. So you've put all those trades in all that way, doing kind of like a play around. We'll calculate them all, and that'll tell us. So after all this trades, it tells us which ones would be in profit and which ones is in loss. And as you can look, we're up 850. And also what it does as well, just down here, is it'll tell you what your trades you've had in. So you've had a total of 4 trades. It'll give you the average what it's broke, because when you're trading leverage on MEXC, then all these separate trades kind of like merge into one, and MEXC will give you an average entry price. And if you buy as the price comes down, your average entry will come down as well. So your total position size, that's just weighted, ignore that bit. And it also gives you a nice visual here. So these are your trades. You trade 1, 2, 3, and 4. And as you can see, 2, 3, and 4 are in profit. That just gives you a nice visual. Your trade 1 is like neutral. So yeah, it just gives you a good idea what you can do coming in and out. Because like I said, some of these trades are lower and higher. But it just gives you a good idea where you can come in and out, and how much leverage you can use. And you can play around with leverage. So you can do this when you're working out what you're going to do throughout the day. So you can go on this first, have a look what you feel you're going to do, chuck a few prices in here, keep changing. You can take them out one at a time. You can clear them all out, or you can take 1 or 2 out. So if you say, oh, I won't, you know what I mean, I'm not going to come in at that one, I'll take that one out. You remove that one, and then you can put another one in and say, I'd come in straight like, I don't know, 93. Let's say we change that, and you can even put more money. You don't have to put $93. You can have whatever trade you want. I just find that rounds it off a bit better. You can add that in, calculate it all again, and it'll give you an idea where you'd be if you'd have done that. So you'd have been a bit better. So yeah, you can have a look on the charts on Bitcoin and see where it's ranging, and see where your highs and lows, your mid-range, where your kind of like your resistance are. You can put resistance in. So if you see a resistance line at say 92, you can put a trade in at 92, kind of like we've done here. Decide what leverage you're going to do, because you continue as it goes down. You can make your leverage a bit higher if you want. So let's see this one. We'll do 92 at 50. So let's take that out now. We'll change leverage on that. We'll see what difference that makes. So what we're at 92, and we'll still put 92 in, but we'll change his leverage to 100 on that one. And we'll calculate that one. So where are we? Which one were it? That one. It's there. So we've got that one in. And where are we? Yeah, so you see how made any difference. It's just made the leverage different. So we haven't, where are we? So as margin used wouldn't have been as much. Just let me show you an example. So if you look at his margin at minute, well, we've got 648. So I'll show you how that works. 648. So we'll go on this 93 one. We'll change this one. We'll put exactly the same trade in, but we'll put the leverage on 100. Add trade, calculate. So as profit, it'll be the same. But if you look, as margin is less. So as profit's same. We've got a total trade size, but as margins loads, so that's what you're using as account. What you've got to watch with that though, when higher leverage you go, you get a tighter margin call. That's a separate video. But yeah, this just gives you an idea. But what I tend to do is I'm careful with my leveraging, and I will put on MEXC, you can put auto leverage on so you don't get stopped out for if price comes back up. Like I say, you just have to be careful. So if we clear them all out, I'll give you a good example. So let's say you come in at 95. And your trade size is, let's say we're doing 95, so I'll add that trade in. So you've got 100 leverage. Now let's say the price drops down to 90. That'll tell you how much. So you see you've not moved down much, and you're down $5 on that one. So you would have, because you leverage on this, you probably leverage out about 94 something. I'd have to work it out. it won't leverage you out at 90. Margin call, sorry, won't come in at 90. So you'd have to put auto on that, or just add this amount in, which I'll do in another video. I'll show you that, showing you how the calculator works on this one. But I think I will combine a video with the calculator and good ways how to use it. So that's the other thing you can do, which I forgot to mention. So this here, now you know how much your P&L would be if the price dropped to that. Then you could add this to your margin and you'd be fine up to this, or add auto margin, like I said. So it just gives you an idea, worst case scenarios. It's ideal, it really is ideal. So yeah, that's going free to the Patreon members on the trading one we've got, the crypto trading site. So yeah, I'll be putting that on shortly, if I haven't already, depending on when you're watching this video. So yeah, be tuned for that one. Right, I'm going to go and sort a few bits out. I need to sort some of my own trades out, so I'll speak to you later.